The Fed chair, Kelly, said that nothing would stop the Fed from raising by 50 basis points in May if it indeed decided that it needed to do so. He's not saying for sure that that's what the Fed will do, but he's saying nothing will stop it. And he made clear the Fed would go to 50 basis point rate hikes if it needed to, as well as go above neutral. Here's what he said earlier in his speech.
If we conclude that it is appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings, we will do so. And if we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we'll do that as well.
Not surprisingly, the probability of a 50 basis point rate hike as measured by Refinitiv surging to 65%. It was around 50% last Friday, and it is up quite a bit today. It seems to be becoming the odds-on bet, at least for the moment, of the market. And that was not all that the Fed chair said that was hawkish. He went on to say that there's a rising risk that long-term expectations, inflation expectations, could move higher. That's a key for the Federal Reserve to watch. If that gets unhinged, the Fed would certainly be concerned about that. He sees the Ukraine war potentially leading to more inflation, and also pointed to more COVID-related supply disruptions from China. So, Kelly, the only good thing the Fed chair said was that he didn't see a high chance of recession, and he thinks it's possible to get down to 2% inflation over 3 years. But mostly, he gave what I would call a consolidated hawkish speech today, which taking some of the highlights of his hawkishness last week and sort of putting them in bolder relief today, I'd say.